Destination Trax is a proprietary investment strategy originally created by the Advisor Cloud 9 founder. This part of the software is used for creating illustrations that highlight the strategy's strengths and compare it to the historical returns of the S&P 500. It's a hybrid strategy that incorporates a fixed index annuity and an aggressively managed market portfolio. The basic concept is that a client will enjoy solid returns, a very low aggregate annual fee, and strong protection from potential market loss, while advisory firms will increase their recurring revenue year to year while providing the client a service in terms of fee savings, performance, and peace of mind. This recommends application will take an investment that you already have in place and compare it to how it would perform in the Destination Trax strategy using the same returns each year. Once you've made all of your menu selections on this page, you can test value to see if moving the investment to the Destination Trax strategy would add value to the client's ending net worth or not. The first thing to do in this menu is to select the account you are considering for Destination Trax. If the account is already a fixed index annuity with the 10% free withdrawal feature, the strategy will make even more sense as it will simply add liquidity and allow dollar cost averaging of sorts into the market from that annuity. Regardless, you can test any of the investment accounts you've already created. Once the accounts are selected, you then have the option of using the entire account value, which in that case you would check the all box to the right of that account, or entering in the dollar value that you desire. Below that we have a few input boxes that I will explain. Bonus is the percentage that the fixed indexed annuity grants on the premium. Deduction is the percentage that's going to be transferred from the fixed index annuity to the market account each year. In almost all cases, this is going to be 10%, as that is the maximum allowed by most products. Threshold is the percentage of the original starting amount that, when reached, should signal a recycling of the market account funds into a new fixed indexed annuity, thereby restarting the process. So for example, if the threshold is set at 80, once the fixed index annuity value falls below 80% of the original premium due to the withdrawals each year, that would signal a recycling of the money that has been transferred into the market account back to safety. Transfer is the percentage of the market account that will be converted back into a new fixed indexed annuity once the threshold has been met. So like we just talked about with threshold, once the recycling is signaled, transfer percentage indicates how much of that market account is going to be brought back to safety. Maturity is the length of the fixed indexed annuity's surrender charge schedule. Cap rate is the cap rate of the fixed index annuity in terms of the annual point-to-point or monthly point-to-point. Keep in mind that over the length of a fixed index annuity's surrender charge schedule, cap rates will probably change annually. So the most accurate method of using this box is to come up with an average rather than just the cap rate in this current year. Advisor fee and current fee are fields used to compare advisor fee of a user's firm in managing the Destination Trax strategy against the advisor fee of whatever the prospect is currently invested in. So as a quick example, if somebody had an account that was in the market being managed by another advisor and they were charging 1.5 points, you would put 1.5 in current fee, and you would put whatever you were going to charge on this strategy in the advisor fee. The main purpose of this is to show that because of the way Destination Trax charges a fee only on the market portion of the strategy, the aggregate usually ends up being around 0.5 point or less. This method assumes that investment costs, which are separate from advisor fees, will be the same. If they are not, the user can adjust by using total fee costs in each field, with advisor fee representing the total fee which would be assessed in the Destination Trax strategy, and current fee representing the total fee of that which the prospect is currently invested in. And lastly, dividend tax is simply the rate that your client would pay dividends on.